We're joined by the Chief Executive, Niel Pretorius. So good to have you with us today.
Thank you for having me.
Just to sidestep for a moment, AECI, do you ever have to deal with explosives? Because you deal with more open cast mining, right?
We don't explode anything anymore. It's all recycling. It's all tailings and mine dumps.
Perfect. So I take it that is a benefit, especially in the current environment that we're operating in, where everyone's concerned about the commodity prices, labor as well. But let's pick up on the labor front. I understand that you're not necessarily taking part in the negotiations as yet?
We're not. No, our negotiation cycle extends over this period. We're only going to be negotiating wages next year again. So we're covered for this year at least.
Could these talks, though, set a precedent for what unions might expect next year from you?
Look, on the whole, because of where we employ, at what level we employ, our wages are generally slightly higher, and the benefits that we offer are also, I think, quite a few steps further down the line than what's currently being negotiated. So yeah, it might set a precedent in some respects, but I think we're probably we've got the terms that the other companies want to sort of avoid, I suppose.
Having said that, though, it's well documented in the Sunday newspapers that you, as a chief executive of a gold mining company, you're here to stay. You prepared to stay and suck it out for the long term, but I take it the gold price has to be a concern for you.
Yes, look, we take full exposure to the gold price. We don't hedge, and as a consequence, you've got to basically take the downside with the upside. It's an industry where you are either over-rewarded or over-punished. And I think that what happens to your company, or to what happens to your company's share price, is not necessarily a reflection of where you are financially or production-wise, but where your shareholders or the market believe you might be in a few months or in a year or so forth. And but that's the sort of volatility that we offer. So if the sentiment is bullish, then it just takes off like a rocket. And if the sentiment is bearish, then you've got to appreciate and understand that, you know, people don't like you very much. But that comes with the territory. And if you can't adapt to that, it's not the job for you.
Do you find that there is a disconnect, though, between where DRD Gold is operationally and the sentiment towards this gold mining company? Well,
towards the company, certainly. But the market is what it is. And I don't think we are being traded based on fundamentals. We lost a number of our institutional shareholders last year when we had a bit of a wobble with a piece of technology that we couldn't get going when we said we would, coupled with the fact that the mood towards gold started turning bearish last year. So at the moment, we're trading as a proxy for gold. It's a very liquid stock. It responds in a very predictable manner to movements in the gold price. And there's money to be made by your day traders on either side.
Yeah.
So there's a storm, and that's why you need storm sales. You've got to basically sail through it, let the market play out. And at some point or another, cycles have become shorter. They become far more severe, and they've become shorter. So you've got to just basically sail through the storm, make sure that your business is resilient, that you've got the systems in place to see it through. Nobody buys a company or nobody buys shares in a company that says that it's able to survive or break even for, you know, a number of months. They buy, everybody who buys shares, especially the professional ones, they all think they're geniuses when it comes to timing. So they want to get that timing just right, and they start buying the stock again in 18 months, 24 months, 12 months, when they believe that the tide has turned for gold sentiment. And it might be a while still before it does.
Operationally, though, can your business still survive with the gold price slightly below $1,100?
No, absolutely. I mean, that is because remember the rand's also weakened quite substantially. So I think if you're a dollar producer, if you're somewhere in West Africa and your costs are paid in dollar or in Kazakhstan or wherever, you know, the countries where your costs are paid in dollar, then you've taken a real hit in margin. But in South Africa, there's been a significant offset because of the fact that the rand is weakened. And we're very fortunate in the sense that the weakening of the rand wasn't accompanied by it was also accompanied by a weakening in the oil price. So you didn't have that immediate increase in petrol and fuel costs and so forth, which has a direct knock-on effect on our costs. And at the same time, also, we no longer really have import parity pricing from the monopolies that supply us. So that the cost line has stayed relatively flat insofar as suppliers are concerned, whilst the revenue line has not taken that much of a hit because the rand is weakened against the dollar. So you want to really be in South Africa, you want to be a gold producer in South Africa at this stage because the currency is helping. And also, you know, we're always complaining about so many things, but if you look at power issues, for example, it's far worse in Zambia at the moment. It's far worse in Ghana at the moment. If you've got your business structured in such a way that you can absorb some of the up and down side of the electricity supply cycle that we've got, and we've engaged with Eskom, then you can absorb a lot of that if your business is structured the way that it is. So a lot of the steps that we've taken over the last few years, both with this sort of thing in mind, but also sort of inadvertently, we didn't really anticipate the Eskom situation earlier this year, have helped in creating a greater degree of resilience to the current market climate, and we could quite happily sort of putter along for the next few quarters until such time as the gold price turns.
So the glass is half full in your eyes.
I think so.
I wish we had more time though, but I've been told to wrap things up in my ear. Thank you so much for your time today. That's Niel Pretorius. He's the Chief Executive of DRD Gold.